realized, the November print will be slower than the 4.6% CPI logged in October of this year. Analysts said lower global oil prices and some moderation in food prices likely helped ease inflation in November. DOE data showed that Dubai crude prices fell by almost $5 a barrel last month. Meanwhile, Oxford Economics said the impact of the emergence of the Omicron variant is highly uncertain. The Philippine Statistics Authority will release the November CPI report tomorrow, that is December 7th. Now, the third quarter saw the country's biggest banks post the fastest asset growth since the start of the COVID pandemic, while aggregate loans rose for the first time in a year. The latest Businessworld banking report showed the combined assets of 44 universal and commercial banks expanded by close to 9% to almost 20 trillion pesos. That's from about 18 trillion pesos in the same 3 months of 2020. Meanwhile, aggregate loans in the third quarter grew by 3.2% to 9.7 trillion pesos. That is a reversal of the year-on-year decline of 5.6% in the second quarter of 2021 and the 0.7% print recorded in the third quarter of 2020. The loan growth in the 3 months to September also snapped 4 straight quarters of a decline. The third quarter asset growth performance marked the fastest in 8 quarters or since the year-on-year expansion of 9.9% recorded in the third quarter of 2019. Take a look at my terminal here. Global stocks looking set to start the week under pressure. Investors looking to the U.S. inflation data, apart from our own here domestically, amid their hawkish tilt there in terms of interest rates and also, of course, the impact of the Omicron. So what is the latest? Recall that Goldman Sachs had cut its forecast for the U.S. economy this year. And next, they say that Omicron will be a drag on growth. But you've also got Dr. Anthony Fauci saying yesterday that there didn't seem to be a great degree of severity to Omicron, but did caution it's too early to be certain. He did say that initial data from South Africa, which is, of course, the epicenter of the outbreak, did not show a resulting surge of hospitalizations. You've also got less panic over in Europe. France says they will try to avoid the new health rules, including a lockdown. Britain also expressed reluctance to require vaccinations. Still, you can see the Nasdaq heavily sold off here. That's down by close to 2%. And a lot has to do, of course, with the possible restrictions of China on their tech stocks listing from abroad, and a lot of them, for instance, SoftBank possibly delisting there and instead moving the listing over to Hong Kong. And you can see quite a shaky start in Asia as investors remain risk off. You can see that on my terminal here, a lot of the haven assets also climbing after yesterday as well. You've also got gold holding an advance, and yet oil rising. Cryptocurrencies also getting swept up in the risk off wave. Bitcoin plunged on Saturday. It's currently below $50,000. And as mentioned, Chinese tech stocks in focus today. Recall that, a lot of eyes are on Southeast Asian stocks. They were the most impacted during the Delta surge. A gauge of Southeast Asian stocks slumped by almost 7% in the 2 months after the Delta variant officially emerged in May. And that, right now we're also already looking at the MSCI Southeast Asia index, and that has already slumped 4% since Thanksgiving. We are going to be looking at our own open and which side we're going on. It does seem to be the case that we are moving against that flow. We are up by 0.6%, staying above the 7,000 levels with which we rebounded on Friday. That despite week-on-week declines last week. Now, this according to Luis Limlingan of Regina Cap. A lot of the sell-offs last week was due to the panic on the Omicron variant. However, towards the end of the week, bargain hunters dominated. Analysts are also seeing inflation data to be released this week could help calm these fears. Another thing is that today begins the longer trading hours. That's going to be from 9:30 a.m. to 3 p.m. of the Philippine Stock Exchange. Now, here to chat about this and other market issues, we have with us BDO Capital's President Ed Francisco. Good morning, Sir Ed, and welcome back.
Good morning.
Sir, let's talk about the Boris and the Omicron. A lot of expectations that would have a major sell off, especially after that November 30 holiday. We were a little bit late reaction there. But then a lot of bargain hunting to bring us back to 7,000 levels. Why the resilience here? Was it just a knee jerk reaction, or is this linked to the fundamentals of the market and our ability to handle another surge in cases?
Yeah, no, no, good points, Danny. It's really one. It's really the resiliency of the market, right? Because we're already again maybe because we were locked down more, right? And then of course we've been extra cautious just recently, where face shields are not mandated, so our cases have been going down. So we're still optimistic. Of course, I think everybody, all the Filipinos are not taking it for granted, so we're still wearing our masks. But it's nice because like last night I had dinner in a mall, and there were lots of people. The restaurants were full, so people are just being cautious on the investment side, but we don't want our Christmas to be dampered. I was with a friend also who has a garment business, and he talked about the surging sales. It's coming back already, so there's optimism. So I hope this Omicron, as Dr. Fauci mentioned, is not severe, and that it's just a mild, and it will not be a big impact on the Philippines.
Sir, if you look at the stocks that had moved last week, are there some patterns here that you're seeing? Which ones? Because it seems to be of course it was a broad based sell off, but when you look at the ones that actually gained, it was Converge, ICTSI, Meralco. It's quite mixed. What really happened here? Which ones were the most painfully battered whenever there's a type of new variant emerging, and which ones were quickly rebounded?
Yeah. No, I guess the stats are different, but in general, right? Of course, the telco should and food, especially those, the sectors that are continue to be doing well. So it's the ones that were susceptible really to more lockdowns or that are affected were the ones who would be hit. But broadband is something we really need, and buying, at least canned goods and beverages should be okay.
Okay. So is there a major repricing that might happen because of the emergence of the variant? Or will you continue with this, fundamental that we can live with the variant? So the retail, the food, these sort of cyclical stocks, it should already be able to cope with it? Or is there a repricing in terms of, okay, we were overexcited, but wait a second, marami pa palang risks?
Right. I hope there won't be a repricing anymore. The fact that at least the index already adjusted, already effectively reprices a lot of the stocks, diba? So I don't think it should go down further because as we see, the numbers should be moving Christmas. We're seeing already Christmas sales going up when I talk to our clients. That's a good sign. So as long as I guess there are no further lockdowns, and I think even the government is being cautious. That's why Iba, when you come in, at one point they removed already the quarantine if from certain countries. So now they're gonna bring it back. I think it's gonna be uniform 5 days again. So these are things to be careful about, lang. And we're still on alert level 2, even if our cases are so low. That's being cautious. So, and I don't think it should put a damper even in the valuation. So. Um, if there should be upside, but it doesn't necessarily mean bringing it down lower because a lot of our corporates, the food manufacturers, the tourism operators already have prepared for this. So they have the safeguards, the precautions in place. And I think we naman, whether we dine in or we order, we should continue to do that to help also the companies.
So what about the global issues in terms of stocks, especially that investors na naman are risk off? Do we need them to be coming back in? We saw, according to Bloomberg, when it was the Delta variant, the Southeast Asian index went down 7%. So regardless, is that going to be the case again this time? What can we expect from the foreign investors?
The foreign investors are a little bit more cautious. So I agree if you're seeing the sentiment as you mentioned in the rest of the region. So it's possible that the foreign inflows will come in so much. The good thing about the Philippine market is because we are resilient, majority already of the stocks are coming from the domestic, right? So at least if this was a year or two ago, then I'd say yes, the index should really go down. But because we're not really dependent on them, not as dependent anyway, therefore I'm not so worried. So you're right, there might be a sell-off in the rest of Asia because they've already, repriced upwards more than we have. We're just recovering. So I don't want to shoot down naman our recovery when humahabol pa lang tayo. And then suddenly, why should we go down as much as them? And then because we've been more close, we've had more quarantine measures, we've been more careful. That means we should also be more ready to reopen because we've learned from the lessons of the others, Danny.
Sir, are you worried about the inflation in the US specifically not being temporary already, as they've mentioned, and possibly a hawkish stance of the Fed that might spill over into our own markets? The central bank governor has said time and again they'll be accommodative, but you also have a lot of analysts watching out and saying we can't forever keep out of step with the rising interest rates.
Yeah, you're right. Because if it was just the Philippines anyway, I totally agree with Governor Ben. We just stay where we are because we need to encourage our SME specialists to borrow and to restock and grow. So there's that possibility that I mean, of course, right? If the U.S. increases rates, then we'll have to follow gradually anyway. We're not seeing it hopefully in the near term. Hopefully, maybe third, fourth quarter, it's a possibility. But hopefully, that should also give enough chance to our borrowers to at least to reopen. And that's why I think you mentioned it earlier that our loans have gone back. No? So we're back already. Hopefully, recovering. We're going back to the 2019 levels. We're seeing a pickup. We're seeing demand, and because the banking industry in a way is a leading indicator, that's a really very good sign. So I hope I'm still positive that sure, even if rates go up, maybe in 6 months from now, 9 months from now, it should not be significant enough, and then there'll be margins already, and then people are working, and then we can survive.
Sir, outlook on the property space, which is of course in focus in terms of possible rising of rates. Have they been able to actually already recover? They were just starting to recover, and then
Yeah.
suddenly we get hit with this. How are the prices reflecting all of these risks? Is it actually all priced in already? Is this the time to be coming into the property space? What's your outlook here?
Okay. My knowledge comes from listening to the market experts, the real estate experts, right? David and JL and everybody else. And because I was involved in a couple of REITs, REITs, so we've just gotten updates from them. Admittedly, some of the verticals got hit, right? But then they are resilient anyway. The office is relatively companies postponed muna some of their projects. But then
Mm.
on the other hand, the provincial projects have been very strong, even in Cebu. I've seen it from some of my clients also. So it's mixed, but province is strong, and then residential, horizontal is strong. Uh, Condos in Manila a little soft, but according to our expert, it should improve. Hopefully, anyway, the BPOs will start hiring again and growing, and that should give also the light at the end of the tunnel for the commercial real estate here in the Philippines. So it's coming back. At least it hasn't been going down, being more soft. We're seeing a recovery there. I think it will continue. Maybe the key to watch lang also is what China does, right? Because there was a report of them reducing their tourism. So if they make it hard for their workers to come here for BPOs or even for offshore, and that will slow down the real estate growth. So let's just remain watchful of what China also does.
Okay. And sir, on the back of that, you've got the Villar Group developing a 2,000 hectare business district, or at least wanting to develop that in the southern part of Greater Manila. This, according to Manny Villar, biggest project, much bigger than Vista, much bigger than any project I've ever done. Of course, they're well known for residential, they're well known for retail, but not necessarily for office spaces, commercial business districts. How much? And of course, they're also very focused on expanding the retail by doing a lot of IPOs. in their portfolio. Is this too ambitious of a project? How good do you think this will be executed, and what to watch out for when it comes to the stock of Vista Land?
Okay. I guess regarding the Villar Group anyway, the fact that Manny Villar has decided to stay out of politics, right, and focus on the business, for me also was a very good sign. He just left, of course, Cynthia and Mark there, but Paolo has been helping and he's been heading Vistaland anyway in the other subsidiaries. I've worked a lot with them. And you've seen the IPOs for All Home, All Day, even now his brother's Medics will list later on this week, right? That's a good sign. I think if with money focusing on the developments, and I've seen them also, they're relatively cautious naman eh. They just don't go and spend everything. So even from a balance sheet and financials perspective, they're very conservative. And the way they attack the market, it's good. So I'm not worried. I think they can also develop by phases anyway. That 2000, but the beauty that they have is that they have the infrastructure. Since they own the malls, they own the supermarkets, right? They can populate it with their own brands, so that the customers will be there. They even own the telco and the power, and sometimes the water already. So it's a self-contained, so it's easier to manage from this perspective.
Okay, so one to watch out for Vista Land, up by 0.8% this morning. And finally, sir, the bourse extending the hours until 3 p.m. What does that do for trading necessarily? Because we actually have, President Monzon saying that we could have survived naman with a half day. In fact, we
Yes,
even had more,
yes.
investing and trading during the pandemic than before. So why extend? And are we expecting any positive developments because of that?
Right. I think it's really more a signal. I agree with you and Monzon. Uh, the volumes have been gone up anyway, right? Even with the shortened hours, but he did want to extend it, and I agree with him. So that is the signal to the rest of the countries that we're really back to normal, even if there's really not as much need. That's just additional overhead, but then it's a signal that hours are longer, that we're there to accept your trades if necessary. But even without that, at least the stock market here is robust and as seen by the IPOs and all the capital market developments.
Okay, so good sign for the markets, and of course, a good
Yeah.
sign for foreign investors as well, that we will be keeping up with the rest of the Asia market trading hours as well. No?
Yes, yes.
Thank you so much, sir. That was, of course, Ed Francisco, president of BDO Capital. Here are other headlines we're keeping our eyes on. The Trade Department has slapped provisional anti dumping duties as high as 32% on specific Portland cement brands from Vietnam. This as they were found to be causing, quote, serious injury to local cement manufacturers. The DTI said 9 out of 16 Vietnamese exporters of Type 1 cement and 4 out of 12 exporters of Type 1P cement have been dumping in the Philippines. The provisional duties are estimated to add about 2 pesos to over 25 pesos to the import cost of a 40-kilogram bag of cement, but it is not expected to be passed on to the users due to strong competition from local and other imported brands. The imposition of anti-dumping duties stemmed from the petition filed by Republic Cement, Cemex, and Holcim Philippines. The DTI found that dumped cement exports from Vietnam accounted for 55% of total Philippine imports from July 2019 to December of 2020. Now, the Finance Department is proposing that all government collections in the form of taxes or contributions be coursed through the BIR. This is in an effort to centralize business transactions in the country. Finance Secretary Sunny Dominguez said the agency is looking into models on how to improve the efficiency of state-run funds, especially the SSS, GSIS, and PhilHealth. In line with this, the DOF is proposing to transfer all collection mandates of other government agencies to the BIR to centralize the inflow of funds going into the government. The finance chief said it is important for the government to simplify its business transactions in a bid to attract investors to locate their operations or expand their activities in the country. Now, when pressed on whether that would mean the abolition or downsizing of the state run funds, Dominguez said the agencies can retain their human resources for as long as they deploy the affected workers to other tasks. And that's a first look into the business day. Today is Monday, December 6, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel, mask on, Wash hands, stay safe, Philippines. We are One News.